In order to beat 98% of the traders, all you need to do is just plan the day ahead. A simple activity like that will greatly enhance the odds of your overall success. So continuation, so continuing with that series, once again, I have the Nifty 50 chart on the hourly. We can see that the moving average crossover that is selected is the 2050. The 20 period moving average is trading above the 50 period moving average, making this giving us a long bias for the market. We will note that today the market gapped down and respected the 50 period moving average. It then went on to close the entire gap. We know that whenever the 50 period moving averages take support, the market tends to behave like a bullish weak security on the time frame that we are analyzing, which is the hourly. And we also know that all analysis done on the hourly are only applicable for the next day's trade session. So with that in mind, we will note that the initial plan would be to go long, but we need a confirmation. And in order to get that confirmation, I have selected an indicator called the ADX, set it up on the hourly time frames with the default setting of 14. And here we will note that the ADX value is below 20, which means that for all practical purposes, this market is a range with a long bias. For all practical purposes, this market is a range with a long bias. I do not trade ranges myself personally. That is, if there is a security with a range long bias, I do not personally go ahead and take the trade. But if I were to do that, then I would know that since ADX is below 20, I would expect the high of the range that is around these levels here. And put them on this candle, that is 22,595 or 22,600, simply because this candlestick high has held up for more than 6 candlesticks. And the low that is around here, 22,300, simply because the low that is at around this point has held for more than 6 candlesticks. In other words, I would put this as a range with a long bias, with 22,600 being the resistance. Therefore, I will sell, or the intention would be to sell the 22,600 CE, and 22,300 will be the support. So the intention will be to sell the 22,300 PE at Nifty 22,450, which is the midpoint of that particular range. Currently the market is trading at 22,520, or that is the level at which it has closed. So the plan will become, if the market trades 75 points lower, the plan would be to write 22,600 CE and 22,300 PE. This would be the trade plan. And of course, we can see that these candles, where I will just mark it with the vertical line, that is this candle that is selected here, and I will just mark it in a dark green color, so you can see this candle here, which is, or perhaps I'll mark it in the red color because this is a resistance. So this candle high is the resistance. Obviously, corresponding to this candle high, the call option would have also created a resistance, and that will be the stop loss. And since this candle low is the support, I will mark this here and maybe just make it in green color, because we are claiming that this could be the support. The low of this candle will also, the put option will form a high here at the low point of this candle, which will be a stop loss for this trade. So, but personally, if you ask me, I do not like to trade stocks with ADX below 25. So with that, it becomes effortless relatively and easy to plan in just 5 minutes. Yesterday, while closing the video, I had also briefly outlined about Reliance. We had just seen how we were just focusing on nearest price action. There is a bullish crossover. This is yesterday's closing. I'll just confirm this. Yeah. So right here is yesterday's closing. Reliance had closed at 12:38. You would note that in the video yesterday, I had just outlined that buy Reliance at 12:30 and 1200 with the stop loss of 1192. Those who have watched the video yesterday can clearly recollect this. And I had also mentioned these are not trade recommendations. We are just using this to practice and give our eyes the necessary exposure of what happens. So let's start this. We can see that the Reliance actually opened up lower, and in the opening itself created a hammer pattern, testing the support of 1230, and a single time frame trader would have got traded. And after that, it just hugged the 20 moving average and continued moving forward. So and as of today, what are we seeing? So in other words, had we entered the clear trade plan, which was the 20 period moving average, we would have nearly picked up the day's lows at 1230 and would have booked out at the closing price of 1247, which is a good move, 1% move on Reliance. Our second lot would have never triggered at 1200, and certainly our SL neither triggered. And now for tomorrow, we will see that this here is the first level support. We can see that the 50 period moving average becomes the second level support. And now the question is, will we buy this or not? We are obviously seeing a golden crossover and the ADX is at above 40. In other words, of course, the plan would be to buy the call option. And since I'm planning to buy, I need to have a reference SL, and the SL in this case, I will select the average to range. I'm seeing it is of around 707 points, 7.5 points. So logically 1198 would be my SL. So what would be the trade plan for the day tomorrow? It would obviously be 1200 call would be the target, or buying it at spot levels at 1245 and 1205 with SL at 1198, and a similar approach can be used even for futures. So with that, I have covered two charts today in a reasonably quick time, and the intention is, I'm sure that based on this you would have more confidence applying these indicators. And if you have any doubts, of course, do not hesitate to share them in the comments, and if you have any suggestions, feedbacks, recommendations, please do share. Thank you for your time.